Hello and welcome back to Bunnex Investment Group. In this video, we are going to talk about the most reasonable gain in Forex. So we'll also review the return on investment per annum of big investors or big players in the Forex industry. But before we jump into the war video, be sure to check out our free Signals Telegram channel. The link is in the description below. So this becomes the first part of the series, becoming a Forex professional trader. Here's the outline of the series. Today we'll be on the first part, which is professional profit expectancy. Then our next part will be top-down analysis by professional traders. Third part will be why you are failing to earn consistently like pro traders. Fourth part, the best and proven way to get a professional funded account. Then the fifth part will be tools professional traders use. Then the last but not the least, the ultimate professional trading style. So today we are going to be dwelling on the first part, whereby we'll review how much you can get out of Forex trading. This is actually a foundation for you to know and the first step to become a professional trader. So let's first talk of a trader that has just discovered Forex. He has gone online on the internet, googled what is Forex trading. The first pop-ups will be baby pips. He opens his account, funds it with the capital of his choice. So due to all flashy lives, usually that he or she has seen on Instagram, Facebook, or YouTube, and how they are portrayed by the so-called successful traders, his mindset is clouded with doubling his account on a daily basis. So basically his mind thinks 100% gain every day, and that will probably rake almost $1 billion, if not $1 trillion at the end of 12 months. But in not more than a week, he will discover that he was only dreaming. So this is the first case scenario that you may find yourself in. Then here's the second case scenario. Then there is another trader who only deposits and never withdraws, because he is a very good account blower. We can actually call him a very skilled account blower. His trading style is to chase the fact of doubling his account in the shortest period of time. So, as you have seen, both scenarios mentioned are all a result of chasing unrealistic goals. The first step to become a professional trader is to have realistic goals. So make sure you watch to the end so that you see the best lot sizing that will give you consistent gains. So below are the reported gains by big players in the Forex industry. These were 2020 gains, by the way. So if you didn't know, Barclays, Old Mutual, Danske Bank, all are involved in security trading. And security trading, we mean all those leveraged products, and Forex is one of them. So in 2020, this one, Barclays, managed to rake in 20% the war year of 2020. This means if Barclays had $100 in its account, right, in January, in December, Barclays had $120. So that is what we mean by 20% gain. Old Mutual, if it started with $100 at the end of the year, they had 118. Then Danske, they had, this is 115. Then Danske had $118. So basically these were the gains by professional traders. I've never seen such big players in this game raking in more than 50% per annum. Usually these are their gains per annum. So, what is your expected gain? And this becomes the frequently asked question that I come across several times. How much can I get from Forex trading, and how much can I gain? How much gain can I attain? So earlier I've shown you how much big players earn, and these are professional traders who have years and years in trading. So yes, of course, it is possible to gain big in Forex depending on the amount of risk you are willing to expose your account to. If you expect it to get at most 25% gain per month with the lowest possible risk, here's how much you get from Forex. So we are going to use $100 account because it's a base or a unit that is easier to calculate if you have 1,000, if you have 10,000, 100,000, or even a million. So if you have $100 account, anticipated gain with the very lowest risk, you are to trade with 0.01 in January, the whole of January. Then we anticipate that you are going to get you are going to begin February with $50. Then from there you shift your lot sizes depending with the first digit of your account. When it comes to $200, you are going to use 0.02, and it's still at $2, so it's still 0.02. At 300, it's now 0.03, and at 375, it's still 0.03. So in December, your $100 will be at $1,075. So calculating the gain that you have attained, we would see that you have more than 1,000% gain, which is a very, very gigantic. However, comparing this to the gain that I have earlier showed you, I am not saying it's not attainable, and I'm not saying it's the only gain that you have to anticipate for, but this is just a small template to give you a very, very low risk in your trading. So as explained from the above table, the gains are way smaller than most traders are willing to get. I'm sure when someone saw that table, he or she has been affected negatively, that this is too low for what he or she was expecting. However, trading at low risk has several advantages, and here are a few of them. We have emotional control. When you lose small, you are bound to keep on trading your trading plan. However, for instance, if you have a $100 account, if you lose $5, I am sure in your next trade you have a higher probability of following your trading plan rather than when you lose $50. When you lose $50, which is 50% of your account, you are definitely going to have a higher probability of indulging into revenge trading as well as over leveraging. Then the second advantage of trading at low risk is account preservation. As traders, we play defensive rather than attack, and we have to preserve our capital. That means we have to be mindful of our capital at all times. So basically, these are a few of the advantages of trading at low risk: emotional control and account preservation. This will be the conceivement of consistent gains. So in everything that we've said in the first part of becoming a professional Forex trader, in Forex you are free to gain whatever amount you are willing to, right? There is no mandate that can judge you on the amount of gain that you have to attain. But the higher the expected gain, the higher the risk exposure you give to yourself. Professional traders looks to gain 10 to 25% per year, and that should stick in your mind. That should give you at least an insight of how much expectancy you should have on your account. The lot sizes I have devised will help beginners to have a realistic expectancy. So the above chart, this one, where we have talked about the amount and the corresponding lot sizes, as well as the period of expectancy up to the end of 12 months, will actually give beginners a realistic expectancy, because some come into Forex with a very unrealistic expectancy of earning approximately 700,000 from an account of $20 in 12 months. Then capital is a tool in trading. The bigger it is, the higher your profit will be. Someone trading with a $100 account is different to someone who's trading a $100,000 account. Why? When someone trading a $100 account in this one, when this one gets, let's say, 5% gain per month, as well as this one, on this account, it means you would have earned $5. Then on this account, you would have earned 5,000. And 5,000 is something you can actually cover expenses and leave some to grow your account, whereas this is nothing against your expenses. Then lastly, trading is a form of investment, so do not rush it. All this that we've been discussing today is basically a cultivation of a mindset we need in the later parts of this course of this video series, which is trading professionally. So trading should be seen as something like this. Money grows slowly, and slowly. I'm sure everyone have come across a saying that it takes a drop to fill an ocean. So in conclusion, follow your plan without deviation, distracting thoughts, or hesitation to act. On that note, thank you for watching. Like and subscribe, and check out our free Signals Telegram channel. This is the link in red.